I just want to go quickly over reacting to what happened in Europe here, Europe and the UK prior to, of course, today's US numbers. We saw the French and German manufacturing and services numbers come out, and you can see it's a pretty clean sweep. All across the board, we see red. This is, of course, showing that in terms of economic activity there, right? Services PMI, manufacturing PMI, we're seeing some decline, right? All of these numbers being in red is one thing, but also the way this is measured is a contraction is under 50. And so what we could see here is, for example, above 50 indicates industry expansion, and below, of course, represents contraction. We've got dollar top left. We've got gold bottom left. We're going to put the Euro USD here in the top right, just because this, as well as the pound USD, both had a lot of news this morning. So 15-minute, let's make our 15-minute charts around the room. So we have dollar, gold, euro, and pound on the screen, guys. We are going to be covering all of these things as the stream gets going, but I want to make sure we get a raw reaction to, of course, the PMI numbers here out of the United States that we're getting in about 30 seconds here or less. So, of course, PMI numbers could move the markets. They also could not move the markets. We're just going to see if the number is surprising, markets could move a lot. If it's not surprising, it might not move at all. We don't know the news. We're here reacting to it, and we're going to trade the aftermath. That's what we're here to do. And let's get our breaking news. All right, and we are in here. The news, gold making a little bit of a move downwards, perhaps suggesting some economic strength out of the United States. Dollar making an initial move higher. And in just a second, I'll go read out the numbers to you guys. We'll take a look at those. Gold shot down, but gave back those returns very, very quickly. So let's take a look here and see what numbers are looking like on the still pending here. All right, there it is. One was good, one was bad. That would explain why the reaction was kind of mixed. Actually, manufacturing PMI numbers coming out slightly better than expected here at 49 compared to 46.1.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
And flash services PMI coming out at 52.4 compared to the 54 number that was expected. So a little bit of disappointment, a little bit of positive. This, again, would, in my opinion, consult for sort of a mixed reaction. And that's what we're getting. We saw a pop in the dollar and then it gave back, kind of a so-so reaction. And again, I think in this case, the market turns its attention very quickly to this doesn't change anything drastically for the meeting coming up on Wednesday. That's probably where we continue to see the markets trade. And yeah, so let's go back to this chart off the daily, off the 4-hour chart that we discussed on the dollar. Again, we're seeing some reaction here. The steam that was pumped into the dollar here prior to this move, again, I'm taking this reaction as not necessarily super bullish for the dollar. We're seeing a little bit of mixed feedback there. The Fed is expected to hike on Wednesday, but from there, the question is, do they rate hike again? Many forecasts, analysts, bank groups, things like that, they don't expect the Fed to raise again. So should be interesting. Anyways, again, retesting resistance here for the daily chart off the dollar. I mentioned that if this level breaks, if we get a strong break, we probably, in my opinion, would trade up to the 618, right, as a deeper retracement. But where we currently sit, I think we do have a good chance of seeing a reaction to this 38.2% retracement. COT, give us the Monday rundown. Big move on gold, huh? Did you see that?
Yeah, lots of longs added on the commodities side. So gold and oil look pretty bullish here. You can see a change in both longs to the upside, and then both shorts are also decreasing. So overall, pretty bullish bias for last Friday's report. But indices not looking as promising as before. So kind of holding off on any trades. The volume looks like it's dwindling a little bit. Unsure markets because of the Fed decision. It's pretty much expected that they're going to rate hike. So
Right.
yeah, not a lot of bullishness or any kind of activity going on this week. But actually the S&P is selling off pretty hard. They had some additions in the longs, but also an incredible amount of shorts picked up on the S&P. So nothing promising. I would say the indices would actually be bearish this week, or at least up until the interest rate decision. So yeah, I'm looking at gold. I'm in a gold trade right now.
Same.
I might look at oil soon, but oil kind of took off. But yeah, overall, just looking at commodities.
Yeah, no, that's a fair point. I mean, this is why we do this each week, guys. We go over the COT report with Frank. He comes on and we do a little bit of analysis together on that. I should say also, this point that we're talking about, the long and short change that you see here, this is the COT report. If you guys are new to the streams, the COT data gives us an idea of what hedge funds and institutional money is basically buying and selling. It's a week-to-week report, and in the streams, we go over them all the time. So as Frank mentioned, essentially gold had a big increase in longs and a decrease in shorts. That's incredibly bullish. So we see gold, really big interest from institutional money this past week. It puts us at a just under a 79% long ratio, which is a tremendous, bias to the upside for institutional money. Oil, also very interesting, 70%, big decrease in shorts, big increase in longs, as Frank is mentioning. So commodities look hot and the indices look a little less attractive here as we go into this week, which I think is probably fair, Frank. What do you think? Like probably NASDAQ and S&P, they probably have more room to pull back. Would you say so? I mean, I've got my chart marked up down at this like 15,200.
I definitely think so. NASDAQ specifically, I have this trend line drawn on like the 1 day, which is also a double top, so it could be good support, but this is around 15,200, 15,300. If we can see a further pullback to there, I'd probably be more comfortable in maybe taking a long there, but we'd have to wait and see because earnings is coming out still, the Fed news, just a lot of stuff. So we'll have to see some confirmation on the technical side too, like maybe a reversal or a hammer, whatever you want to call it, just some pressure to the upside so we can get an idea that maybe price wants to turn around, but who knows.
But so I'm dollar bearish because I pray that Jeremy Powell is going to say, well, we're acknowledging the lower CPI, and that they're going to say that, well, we're not going to have so much inflation and we're not going to have so much interest rates coming throughout the year or even next year. So I hope for a dovish Fed on Wednesday. So that's what I'm hoping for.
Fair enough. Yeah, no, I think it's going to be an interesting report on Wednesday. As usual, by the time reports roll around, guys, the question of whether or not the Fed is going to raise rates, pretty much for the last 2 years, every time they say they're going to do something in terms of a rate decision, they do it. But what's more interesting to the market, as Ivan's pointing out, is their commentary going forward. Is Jerome Powell going to make mention of a CPI progress being made that could hint to the next meeting showing signs of, okay, well, they're going to pause or they're perhaps done completely with their rate hikes? These signals could be very bullish for things like the indices. As Ivan mentioned, the euro could appreciate very well in that situation. So Ivan, walk us through the game plan with the euro this week. Let's say you get a breakout here higher. How would you trade it?
Oh, it's easy peasy lemon squeezy. So what I want to see is I just want a candle close above the previous high, which was made this morning at 10 a.m. my time at least, and then just a pullback. So either up to 1170 or 112, and then a pullback. So I just need a candle closes above. So right now we are way far away from it, and then when it comes back down, either use limit order or I actually just click the button, but I would probably do a limit order, and that will probably happen by tomorrow morning, London Open, hopefully.
Okay, fair enough. Yeah, I mean, I like that as well. And I think, I also want to ask you there, Ivan, you've got euro dollar pulled up. What about
Mm.
pound dollar? Pound dollar had some interesting data come out of it, right? We had CPI, really cool. What's your thought on pound dollar? Are you still bullish on this one, despite some of the recent changes?
Well, yeah. So much hasn't happened as of this morning, even though the PMIs came out and really crushed it. So it still is being priced in higher interest rate. But for me, it is all about the dollar weakness that will lead to pound strength and euro strength. So it's kind of like a two-headed thing. And then now with the short-term volatility being to the downside, I'll just keep waiting, but nothing changed. It doesn't change me overall, but it might change the market. But for me, I'm still waiting for the bullishness.
I think pausing for the indices for me right now is kind of what I'm looking to do. NASDAQ kind of broke some levels of support that I was looking at, this support zone. I didn't take any trades because I was looking at gold at the time. Granted, I took a loss on gold, so it wouldn't have mattered if I looked at NASDAQ or gold. I took a loss on gold. But I'm also just being patient here, waiting to see if we can get a deeper retracement to key levels of structure. So just to catch up with, I guess, where I'm at with my watch list here this week, I'm waiting for a deeper pullback. And also, as we've discussed here, the Fed meeting on Wednesday is going to move the markets drastically, whether up or down. I am going to kind of just be on the sidelines and only really interested in a new trade if we do get some bigger discounts on the indices. And then the other side of things, as I mentioned here, I am looking to get long gold. And as you mentioned with that dollar concept, gold longs for me right now are kind of gold longs, but they're also more of just a play counter to the dollar. The correlation here is pretty strong. Usually, historically, we see dollar down, gold up, and vice versa. So that's where I'm at in terms of trade setups. Do you have any thoughts on gold, Ivan?
You're running fast there, though, but the S&P 500 and Nasdaq said we're going to come down a bit. It hasn't come down as much as we want to. So I'm just wondering why you are flustered, because this is kind of what we have been waiting for, either this one or 4460. So yes, you can say that you're pausing, but by any means and any chance, we haven't really got what we wanted. So as I still see this as bullish, even though it comes a bit lower. Yeah. But hey, we haven't made a new low yet. So
to your point there on the NASDAQ, it is so I was pulling up the NASDAQ, but to your point on S&P, I think I have that same level drawn as you, where I would potentially be interested in picking up SPY. But just watching the COT reports recently, there has been a really big preference overall to the NASDAQ. So I've kind of been looking to trade that. And I also am just not going to be in a rush to take trades ahead of the Fed news. So that's kind of where I'm at. But on the SPY, I've got the same level drawn up there. I do think that zone up top still is reasonably bullish. This is a strong, move up. Dollar weakness should help out here. But again, I guess perhaps that second zone that you've got would be trade idea number 2. So if the first one doesn't work out, I'd potentially be interested in a second one in that area. So that's where I'm at. So what do you think, Ivan? Do you trade the indices ever, or do you stick to, mostly to currency pairs?
I do the boring every month, but I have been starting to pick up what you guys do. Not because I am not clever enough, but I'm just not bothered. Because I feel like this is going to go on forever. So I'm like, okay, am I gonna buy today, or am I gonna wait a week? So yeah, I do. I'm starting to do, but I don't have okay. So the price action right now, it has come a bit down. Okay, am I gonna buy it now, or am I gonna wait for 44.60? For me, it's so boring because it doesn't go up or down a lot. And to be honest, we don't really have a big fall yet, so it doesn't really trigger any emotions in me, because this is just it's just a tortoise or whatever you call it. It just goes, and it's just there. So I do stuff.
I will say also there's a big barrier to trading indices for a lot of people, just because the way Forex brokerages the contract size that CFDs typically use on forex brokerages are huge. So when you trade the futures market, or you trade what I do, which is essentially stock ETFs, because of regulatory issues in the United States, I can't trade CFDs on any regulated brokers. But I will say it makes a world of a difference when you can actually use a proper size. Whereas a lot of forex brokers, a lot of people don't like the indices, because when they try and trade US 30, which is trading the Dow is actually, it's weird to say, it's actually a very calm index compared to the NASDAQ. But futures contracts are very different, or ETFs are very different than trading on a forex broker, which gives you this ginormous size, even at a 0.01 lot size. So you got to be very careful with indices if you're trading them on forex brokers. But yeah, that's just a little bit of a tip for people who are interested in learning on the indices. Please test it on a demo, because the sizing is very big if you're using an FX broker. So just a little bit of a fair warning.
Can I just say what I'm thinking? When I see this, I see that. I see when we are high here, I'm like, okay, I anticipate in my brain, I am thinking, when are we getting that? When are we getting this? And then my brain clicks into, okay, so how would the reversal look like? Okay, this is a very perfect reversal. There's a very interesting buy there. And then this one is very much difficult to trade. But then this is what I dream about seeing when I'm up there. When I see that, that's when I start expecting this reversal. And then in the end, went higher. So just in like an insight into my brain of what I would like to see. And because it's kind of like difficult to okay, we have a high here, and so what? We want it to come back, but how does it actually look like, and how does it actually feel like? Because I feel like real trading, and like we are here now, we don't really know what's going on, is kind of, this is how I simplify it, is go back and have a very clear thing of what you want to see, and you've seen it many times, and you have to see it many times again to trade it.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.